Let's talk about the loan amount versus purchase price when you're doing a pre-approval. So when you get pre-qualified or pre-approved for a home, and yes, there is a difference. We'll put links around here, but in short, pre-approval means you've done like the paperwork to verify what got you the pre-qualification. So submit a loan application, you get pre-qualified. Congrats. Pre-approval says you've taken the next step and you've done the paperwork to verify all that information. So the real question here is like, how much do you get qualified for? Like, what do you do if you know you want to buy a house for X? What do you do as far as the loan amount if you're not sure? And maybe you'll spend a little more, maybe a little less. My recommendation is this: get pre-approved for the upper end from a sales price perspective and from a loan amount perspective on the upper end of what you think you might spend. So for example, let's say somebody calls and they say they're looking somewhere between 450 to 500,000. My advice: let's see if we can get you pre-qualified for 525. Not because I want you to buy a bigger house, not because I want to stretch you financially or put you in a bind. That's not the case. But the reality is, if you're looking between 450 and 500, you may be out driving around that day or that weekend looking around at houses, and the one next door is 510. And the last thing I want you to do is have to worry about calling me and hunt me down on a Saturday at 4 o'clock in the afternoon to say like, man, can I afford a $510,000 house? Even though 500 was the upper range, it happens more than you think about folks just always stretching that extra little bit to find that extra, what can they get for that extra 10 grand? Because that house next door was just a little bit more. So I think that's the other part too, is have a really good understanding of your budget and what you want to spend. Don't let the realtor dictate that. So if you say, man, this is the upper end of what I'm going to spend, stay to it. I know I had an absolute hard when I bought my house 15 years ago, and I ended up spending 2 grand more than I thought. So I was like, I'm not breaking this, and it was 2 grand more. But at the end of the day, I would say go to the upper end, and here's why. One, for that purchase price. Two, for the loan amount. Let's say somebody says I want to buy 450 to 500,000, and that 500 is the absolute max. Will not spend anymore. Cool. So they truly swear up and down like this is their limit. They're really looking 450, 475, and they're gonna go ahead and get pre-approved with us for 500,000. Let's do it. They also think they're gonna put down 10%. That's 50 grand on $500,000. That means their loan amount would be 450. My recommendation: let's get you pre-approved if we can at 5% down, meaning smaller down payment, bigger loan amount. Why? Because again, if you're approved at 450 loan amount, then if we do 5% down, that's a 475. So if you're approved at the 475, then we know you're good down to that 450. So still stick with your 10%, but if we just qualify you for a little more, what if the taxes come in a little higher? What if there's an HOA you didn't know about? What if your car, you ran over 4 nails and needed, a whole new brand new set of tires? What if life happens and you got to spend money, and all of a sudden that 10% down, that 50 grand is no longer there. I want to make sure we've built in enough cushion and enough wiggle room to make sure that you can still do something if the taxes are a little more, the insurance is a little more, the house needs a few bucks for remodeling. So maybe, new carpet. So instead of putting 50, you're gonna put down 25 and use the extra for doing stuff. So again, when it comes to getting pre-approved for a home, and what do you do as far as a purchase price and a loan amount? And my expertise, my recommendation: go bigger than you think. Just because if you're pre-approved for way up here, then buying something underneath is easy, right? The reverse is not good. Meaning, hey, you get pre-approved for here, and all of a sudden you find something way up here, then you got to scramble. It doesn't mean you can't get approved for that, but might as well do it up front and know what you can do, have a plan, execute the plan, and know that you're good. But I don't want you to buy any more house or get a bigger loan amount than you want. But I am telling you, be prepared, be ready, and know the numbers, so that way you can just make sure you're doing what you want to do within your budget. So if you have questions, the Mortgage Mark team is here to help. Again, this is our recommendation anyway, is to help folks just make sure they're properly prepared and have everything they need to negotiate a strong offer. So call us if you have any questions. And as always, when you think mortgage, think Mark.